Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we're going to talk about the top 10 cannabis stock news stories of the week from the Benzinga.com article. Number 10 is coronavirus fears fuel a record week on Wall Street. U.S. pot stocks rally to close the week. Wall Street fears over the coronavirus leads to the Dow's fastest 10% correction in history in the stock market. So U.S. cannabis stocks bucked the trend on Friday, rallying to a big way, closing the week on a high note. Canada pot stocks, however, lagged the sector with only a small handful closing in the day. So there's been a lot of volatility. We saw the largest point drop in history, 1,200 points, followed by one of the fastest increases. And so the volatility is there. It came down, it went back up. We saw another 850 point drop yesterday. Futures this morning were up 666 points. So there's a lot of money to be made during that up and down period. If you're buying and holding, it's just a flat line until it just drops off. So I think that we haven't even begun to see the effects. So this is hysteresis, which is the phenomenon in which the value of a physical property lags behind the changes and the effects causing it. Similar to like a magnet, it's going to come together eventually, but there's a pause in between. So when you're not producing something, that is going to cause an effect in the supply, right? And so supply demand. So demand is constant, and when the supply drops, that's going to increase the price and the hysteria, if you will. So there's going to be a lot of issues. Look at any auto manufacturer, whether it's Tesla or otherwise. There's going to be issues down the road from the lack of production. Number 9 on the list is innovative industrial properties quadrupled their net income in the fourth quarter. That's a real estate investment trust. And so it looks like they're somewhat profitable. I'm not sure if that's because they're gouging their individual tenants, but I think that whatever price that they're putting in is probably higher than what it will be 3 months from now, 6 months from now. I think this is going to be the catalyst for a correction in commercial and residential property. And this is probably the height of their revenue for the remainder of the year. And I don't see this being a long-term trend in terms of their profitability, because it's just going to take a little bit of a drop in commercial property for them to struggle. Number 8 on the list is Acreage Holdings reports a fourth quarter full year earnings revenue doubling year over year. So fourth quarter in fiscal year 2019 pro forma revenue came in at 43 million, 155 million respectively. So Acreage Holdings, one of the largest vertically integrated U.S. multi-state operators, announced earnings for the fourth quarter and year end effectively December 31st. Pretty strong revenue numbers. I'd like to know what the profit is on that. I have to dive into that and see, revenues versus profit. If they don't have a profit model, they're not going to be around much longer, either bought out by somebody when their price drops, or they just will disappear. Number 7 is Tilray is being sued by 420 for $130 million in damages. So it looks like a Tilray had an agreement with 420 Investments. It was an all stock deal. They got $7 million in cash, of which 420 Investments is not going to give back to Tilray. And in fact, they're going to be suing them for an additional $130 million in damages, which is interesting because as you do your due diligence, you have that opportunity to walk away. It's no guarantee that that agreement was going to go through, but obviously 420 Investments was expecting that, relying on it, and therefore the lawsuit. I don't know if it's a frivolous lawsuit. We'll find out in court whether or not that's going to hold up. It seems like Tilray had that option to walk away, but nonetheless, it does kind of bring to a point where there's going to be more lawsuits for whatever reason. People need money, they want money, and when they don't get it, they're going to get their lawyer. Number 6 is a Bernie Sanders or Elizabeth Warren victory in November might be awful for cannabis stocks. So this article says that while big-time advocates for legalizing marijuana, Sanders and Warren share no love for big businesses. So Bernie Sanders and Elizabeth Warren have both led the charge to legalize marijuana among remaining presidential candidates. The end result of either becoming president for pot stocks may not be as green as you think. It's because Sanders and Warren have also pushed for the unionization of marijuana businesses and the prevention of industry consolidation. I mean, what is the alternative? You're going to have, a candidate like Bloomberg, who obviously doesn't care. He's going to stop and frisk everybody and take their money. Um, I think that the current administration and the recent talks about not allowing states' rights or even legalization is purely political as a way to get reelected. I think that they're looking at nothing but the tax revenues and opportunities. I don't think they're going to do anything with the states. I think that's merely just a ploy to appease their conservative constituents until that reelection. And then they're just going to go right back to what they were doing before, which is practically nothing until all 50 states have a medical program. And then they look at Canada's legalization and Mexico's potential legalization and looking at this legalization sandwich and saying, yeah, we want those tax revenues too. So I think this is more a political hype than anything else. Joe Biden would be a ridiculous candidate for anybody, but not as bad as Bloomberg. So don't really care about politics. This is a cannabis business podcast. I'm just pointing out that I think all of this is bullshit. Number 5 is there's a bank that remains lukewarm on Aurora Cannabis. So, this bank I've never heard of has a securities analyst who I've never heard of who sees strong retail sales as having a neutral impact on stocks like Aurora. So in an update to clients, they reasserted their hold rating on Aurora's stock at $2 a share, which is incredibly expensive for them to have a publicly traded company to put up with all of the compliance and the expenses associated with being a publicly traded company. So yeah, if they can't increase that share price beyond $2, then they're practically a penny stock under $3. There's going to be no big board exchange that wants them on there as a $2 share price. So they're going to have to figure that out. So number 4 is that Constellation Brands is not going to make any additional cash contributions to Canopy growth. So right on track with the trend is you have to be profitable. You have to create your own revenue from sales in order to be a going concern. So Constellation cited the sizable cash position of $2.3 billion as justification. That's more justification than most companies get. So Constellation Brands does not intend to make any additional cash infusions to Canopy growth as per the latest regulatory filings by the alcohol giant. It's exactly right. They're just going to keep putting in their own board members and whoever else they need to in order to create more of a consumer product good brand, and then hopefully maturing that company from just an agricultural crop to an actual brand of products. So that'll be interesting to see how that rolls out. Number 3 is that Hollister Biosciences is going to acquire a premier cannabis extract brand called Venom Extracts. So they're an award-winning company that generated an EBITDA of 2.5 million on revenues of 16.5 million last year. So Hollister announced the signing of an LOI, which is a letter of intent, which doesn't mean anything in my book. It's ridiculous. So they're going to acquire one of Arizona's premier extract brands called Venom Extracts. And according to Venom, their unaudited financial statements generated earnings before interest, deductions, taxes, and appreciation of a Canadian 2.5 million on revenues of 16.5 million for the year ending December 31st. So a whole lot of unknowns here. We'll see if this ends up unwinding after they do their due diligence. Number 2 on the list, there's 5 cannabis stocks to own for the next decade. So these stocks hold the promise of long-term benefits despite the current cannabis market downturn. Marijuana stocks may be nearing an inflection point. Legal marijuana in turn should slowly morph into a more professionally managed industry with a rather bright long-term outlook. So there's 5 cannabis stocks poised to benefit from the ongoing structural and tactical changes over the next decade. Regardless, there's a lot of volatility. I wouldn't advise anybody to buy in any individual stock. When they talk about the markets always going up, they're right. How often do you hear the Dow reallocating their portfolio or the S&P, and yet it happens all the time? They get rid of companies that aren't doing well. This isn't a matter of like an economic indicator saying that the Dow is all about the industrial industry in the U.S. This is about ensuring that the Dow continues to go up no matter what. So they're going to get rid of companies that don't fit that narrative. So if you own the companies in the Dow, some of those may go down, some of those may go bankrupt, but if you own the index, that will go up. So my advice is to anybody, if you're risky, go ahead and own those individual stocks. Many of them won't survive the year. The index overall, yeah, that's going to go up. So when people say buy the dip or, stocks only go up, that's bullshit. Stocks don't go up. An index will, because they get rid of those individual stocks. So, you can take a look at an index that we have. It's called the Investable AI-based Cannabis Index. Since August, we have a 38% return on our index. So this is an artificial intelligence-based algorithm that was written by Saroj Investments, and their 3-year average return is over 42%. So again, if you want to compare that to what's going on in the industry, ticker symbol MJ is probably one of the most widely known companies, as well as PotX. And so when you compare the ETF MG Alternative Harvest return of negative 46% and PotX's return of negative 44% during the same 6-month period, we're up 38%. Now that's more than an 80% difference. So when you have an artificial intelligence based algorithm that we have that's based on technical analysis with predictive analytics, we're winning. We're doing really well, and we are finally open. I sent a press release yesterday. So for accredited investors or institutional investors, that's open. It won't be available to the general public for another couple of quarters, maybe a year, until we file an IPO. At that point, it'll be available to anybody and everybody. But for right now, we are crushing the competition with our index. So that's what I would advise, is looking at an index similar to an investable AI-based cannabis index. All the rest of them are doing terrible, by the way. We're crushing it. I don't know what else to say about that. So if you got any questions, email me, josh@thetalkinghedge.com. And number one on the list is pot stock pandemic. The markets tumble as the coronavirus fear intensify and stocks could get hit hard. So corona fears spooked the markets. The Dow dropped 1,000 points, worst in 2 years, and the fastest 10% correction in history, followed by one of the largest price increases or point increases in history too. So that kind of volatility is crazy. So the global financial markets were in a state of disarray as the growing fears over the rapid spread of the novel coronavirus caused Wall Street to suffer in its worst trading session in 2 years. So as you can imagine, cannabis stocks got hammered, and a few of them could be in for a very rough year if the situation continues, which is even more reason to take a look at an index rather than an individual security. But if you have that kind of risk tolerance, why don't you just take a look at the 2x or 10x, or the inverse? So if you were betting for or against, there's 2x and 10x opportunities out there. So for every 1 point increase, your stock will go up either 2x or 10x. So there's opportunities out there for risk-taking individuals, which I would not recommend. I would either sit on cash, and if you're a dip buyer, wait for that huge dip. Otherwise, go into something a little bit less risky, like an AI-based algorithm that is a smart trader. So that's takes the emotions out of it, basically, is what it is. And we also look at just technicals. We don't look at the fundamentals, just the technical analysis, which kind of helps us out, which is why we're up almost 40% in the last 2 quarters compared to negative 44%. Quite the difference. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.